Well, all right. Thanks for joining into James and John Economy, where we talk about real estate, oil, gas, gold, Bitcoin, all the good stuff that people are looking into, and we try to predict the future. Now, it's not financial advice or anything like that, but let's take a look at it. Oil and gas is up. You got crude up a little bit. It is just kind of floating between $70 $80 right now. Natural gas is up 350. That's great for all of us who hold assets there. Let's take a look at this stuff. All right, here is crude. Came up due to some sanctions and everything, and slowly fell down. Now it's starting to head up. It could have a rocky road. When it gets past that white line, that's going to be a really good thing. So if it pops past that white line, it will probably break out again. We'll see how much and for how long. I think we're just going to kind of go sideways until we get a real shortage, and we'll kind of go over that a little bit later. Nat gas is up. It's way over the 200. It is in a bull market, as you say, and it just keeps every time it floats down, it just keeps floating back again. It is hovering over $3 right now. It probably will continue to. It depends on how bad this next winter storm gets, etc. We'll see what happens with the LNG markets to the outside world. Now, the last administration could have put such a kibosh on it that the rest of the world just found LNG somewhere else and is sourcing that, but we shall see type thing. But anything over $3 is great. If the history of natural gas is typically around $2 to $3, but as energy needs ramp up, as people use more, as people make more money, they use more energy, it's going to it's just going to drive the price up. So it's in a good place. There's also a lot of shorts on natural gas. Some of them have come off quite a bit, but I'm still thinking that eventually get between $3.50 to $5 steadily, and we will see it go from there. Bitcoin is just kind of going sideways, and by sideways I mean oscillating between about 93,000 and 105,000. So I don't know if you're buy the dip or it's not financial advice. I'm not buying the dip on each of these because crypto is let's just say bring your own diapers. It is crazy fast and stuff. Make a lot of money, but you can lose a lot of money just as fast. So there are some that'll think it'll pop up to the 112 eventually here once it breaks this kind of like a triangle formation that it is. Here's the bottom of the triangle. Here's the top. Once it breaks that triangle formation, it's going to go up or down. It's going to go one way or the other. And again, current administration can do a lot of things if they get everything approved and they start buying Bitcoin in the U.S. government, or at least tells people it will buy Bitcoin. Bitcoin's going to go up. If the U.S. government is smart, they will not buy Bitcoin at $100,000 a coin. They're going to wait till it falls and then they're going to buy it, right? So we'll see. We'll see what happens. But for now, it seems like it's going to go through this trend. It'll probably break, I don't know, sometime through here. We'll see. But it could go up, could go down. If it goes up, it'll probably hit around 112 to 120. If it goes down, it'll probably hit about 60-ish, give or take. Depends if it falls past this line. It's going to go down hard. But if you're not a believer in Bitcoin, you are probably a believer in gold, which has hit all-time highs. Look at that. I mean, it broke 2,900 the other day. And that is just an insane run, right? I mean, maybe gold lags Bitcoin. When Bitcoin goes up, gold falls. I'd have to think about that and go there. But it has been in a bull market since about 2023. It's just been kind of going off type thing. So yeah. But if you bought anywhere around 2000, you are a happy camper. It's gone up 30%, and that's just gold. That's just stuff you keep. It just sits there, right? So that's good. Now, it is saying that people are worried, about the economy, worried about inflation and stuff, worried about the value of fiat currency. So that is something to consider. Being a fiat currency, let's look at the mighty dollar. It flew up on its uptrend. It came down a little bit, and now is in kind of consolidating. So we'll see what happens here. Things go sideways, things go up, or things go down. So once they go sideways, they're either going to go up or down. I do not see anything showing us that the value of the dollar will fly down, right? And I mean fly as in break this green line that it's been in for a while. See, it goes uptrend, kind of falls, consolidates, falls, consolidates, kind of comes back up. Now it's just been up and up and up and up and up. This is a a sign that dollars are becoming more precious, right? Just like gold. Gold is becoming more precious because the value is going up higher. It's not necessarily that the dollar is going down in value, which is going up. Again, this is compared to other currencies. So it is the fact that these things are going up. Now, others have postulated once the dollar hits this line, that's when things fall apart. All H double hockey sticks breaks loose because it doesn't have to do as much with America as it has to do with the rest of the world that's in dollar-denominated debt. In other words, if you're in Mexico and you borrowed a loan from the U.S. or someone in the U.S., you got to pay back in dollars, not pesos. Which, here's a chart of the Mexican peso. So if you borrowed in dollars right over here, this is the dollar. Now you gotta pay it back up here. Like if you took a loan out, maybe let's just say last year. Um, there we go. Last year. Yeah. I would say if you have taken any loan out within the last 2.5 years, give or take, the value of the dollar has gone up. So if you took it out down here, that's 60, it's gone up 20%, give or take. So if you borrowed 100 grand, you now owe 100 to 100, or sorry, 120 to 125 grand if you haven't paid any of it off. Get my drift? That's how. Now put an extra zero on that. Yeah, things get out of control. So I remember in my time, last time I was in Mexico, it was like six. I mean, look at that. That's crazy. That is crazy. That's in 2020. It was $1 American was 6.5 to 7 pesos. It is triple that. That's crazy. So when the dollar goes up, the whole world sinks, and they will pull us down because they'll stop buying our products, right? So it's all of these things are tied together. But let's go on to real estate. Let's take a also silver. All right, here's a picture of silver. It is bouncing between 31 and like between 29 to 33, give or take. It has been up, but let's see here. It's gonna follow gold, but not as hard. Silver's industrial mode, so a lot of people that try and short it and stuff, but it's gone up, consolidated, gone up again. It'll consolidate, and we'll see. It might dip down a little bit, but we'll see if it flies up. Let's take a big look. Oh. So this is silver on the monthly. As you can see, it made a rocket ship back here uh, in the 2010s, not even the last recession, basically the last half of the last recession. Um, and it's kind of going up here. So we'll see if it keeps stair-stepping its way up. My guess is going to hit some big resistance somewhere right around here, but we shall see. Speaking of housing, let's look at the U.S. housing market is likely to remain largely frozen through 2025. Some growth is still expected, but very subdued pace of 3% or less. Demand, often understood through existing home sales, remains exceptionally low. Housing is slowing down, right? So we can see that through the sales. We can see that. Just look at how many are on the market for more than 30 to 60 days, right? Maybe we'll go later if it's a buyer or seller's market, but another thing in housing I want to talk about is the jobs. I remember last thing I talked about the jobs numbers. We're going to go over there. But before we do that, we're going to look at this. This is crazy. LA, in response to the January 2025 fires in Los Angeles, California, the governor, Gruesome Newsom, and city council have issued orders to temporarily ban evictions for tenants who host displaced people. So in other words, you can't ban a tenant. Like this is just the beginning type thing. Now I know how you feel. They're fire survivors. Rents in LA. I don't know if you noted if you knew this, but have gone up 3 to 5 times. Stuff that was going for, $3,000 a month is going for like $15,000 a month because there is nowhere to sleep. Like wildfires have destroyed a lot of the housing, and and this is the second largest city in the U.S. and people still want to move. So hey, it's not a gouging thing. It's literally a supply and demand. The wildfires, which could have been prevented, literally took out a lot of supply, and so there's little supply, and it created a lot more demand at the same time. So prices flew up, and now they're saying you can't ban tenants who are displaced. And how do they prove that? Are they just cry displaced or what? I don't know. But my point is, this is scary. This is when the government says, "Hey, this property is not yours; it's ours. You're just you are just managing it with your own money and with your own sweat and tears and everything. And this is scary because this can start here and then go to a lot of places. A lot of things start in California and then make their way to other cities in the U.S. Now there is like a very red versus blue city thing going on right now. Um, I'm in Texas, so I'm not super worried about it, but it is scary to know that, hey, this is happening in parts of the world. And again, want to have a lot of compassion for people who lost their homes and everything. And I hope they go after the government for their losses because it could have been prevented. However, it's just one of those things to where you don't want to negatively impact or hurt the people that are providing housing for them. Um, by doing something like this. Because what if say people say, okay, we're not gonna. What if a bunch of landlords say, hey, okay, we're not going to rent to displaced people? What happens then? I mean, yeah, exactly. So just want to give you a note on that. And again, kind of, it feels like that they're slowly eroding the rights of landlords continuously. And I say that I'm a tenant right now, so it's not like I'm just this mean landlord pushing people around or getting on one side. I'm a tenant right now. I've been a tenant for a while now. So I get both sides. I've been a landlord. I am currently a tenant. So I've been on both sides of the ball. I get it. So, all right, let's go over job numbers. Today, speaking of displacement and jobs, job numbers in the U.S. have been revised downward, indicating the economy added fewer jobs than previously reported. So here's the issue that we're facing, right? With the last administration, this just says it perfectly. The final employment under former President Joe Biden's administration showed almost 600,000 fewer jobs. So in other words, they're posting jobs and then they are revising them months later saying, oh, we were wrong about that, because everybody looks at the job postings. Not a lot of people go back and look at revisions, okay? Because that's the big news. Now, another thing that Doge has discovered and such is majority of those jobs were created under the government. So what the last administration did, they wanted to give the allure of a great economy. How do you do that? You say, hey, job numbers are up. That's great. Employers are hiring because the economy is good. They have money to spend. They want to grow, expand, etc., etc. So they want to hire other people. This is a good thing. Except they created that evidence that out of nothing, and it wasn't really true. And so now we're starting to see. I mean, job report shows a hiring slowdown as companies are reacting. I mean, I'll let you read this, but it is the job market is slowing down. Unemployment rate and the Psalms rule. Psalms rule is a recession indicator that uses unemployment rate to signal when the economy is entering a recession. The rule states that a recession begins when unemployment rate increases by 0.05% more over the previous 12 months. It's actually a rolling 3-month one for that when I was listening to actually Miss Psalm herself who developed this, right? All right, we're just going to go to the Fred data itself and show you. So, some recession indicator signals the start of a recession when the 3-month moving average of the national employment raises by half a percentage point or more relative to the minimum of the 3-month averages from the previous 12 months. So, you got to go in 3-month averages and you just look at the previous 12 months. Right here is 0.37 in January of 2025. Let's go to January 2024. It's almost a 0.5 change. Not quite. And I hope I'm reading this right. But if we go to August of 2024, 0.57, August of 2023, yeah, right there. So we are on the hinge of the song rule coming true. It actually did a report on it later, a little while ago, but this is very, very concerning. So here's the zero like of it, and then negative, positive correlation rate. So it's heading upwards, which is not good, right? We're not, and here are the recession indicators, right? So if we look, some rule heads up when we say there's a recession. The recession's we always look back at recessions, right? But the Psalm rule it's accurate for every recession. They actually made this rule after the last recession, trying to predict recessions. So we shall see what happens. I believe we're gonna have a recession. I think we will, but we're gonna see about it together. This chart is the same thing from 2020. I just popped it up. This is bigger, but yeah, the rolling average of unemployment is slowly creeping up. And so it's getting, so here's August 2024. Let's see here. Still, it's on its way up. That's not a good thing. Jobs numbers. U.S. economy created 6,000 fewer jobs in the last 12 months over March than previously estimated. We already went over that, but there's just another one. So the job numbers are coming down. That's not a good thing. Also, with this, with the job numbers in any sector really, government or not, we've also got some things happening through Doge and the current administration. And I just Googled number of federal employees taking buyout. So if you didn't know, Trump offered them a buyout, which I thought was very gracious of him. He said basically if you wanna quit, that's fine with us. Take this buyout program where you won't work for the government, but you get paid your normal wages and benefits and everything till September. So he's giving you like I think 6 to 8 months of just free pay. And if you don't, also we're going to investigate you. So there's a sugar in the stick, right? Roughly 60,000 federal employees, over 2.5% took it. 65 federal employees. I mean, something about that. Around 60,000 federal employees are taking it. So like 3%, I guess you get 2.5, 2 to 3%, whatever you want to call it, of the federal employees, of the civilian federal workforce is losing their job. Okay? But they've got 6 months of still pay, so it's not really going to affect the economy much in 6 months. They still look for the jobs, but it's one of those things where it's unemployment is getting higher, right? When we make the government more efficient and we go in and we let a bunch of people go that aren't really doing anything or just getting paid, it's going to affect the economy because they buy services and products from others and they consume. And when they don't have enough money because they don't have a job, they're not consuming. And who wants to hire these people, by the way? When you say, yeah, I didn't do anything for the last 4 years or 5 years or whatever in the federal government, but watch movies and Netflix and log in every once in a while, or bought a mouse mover so I can work from home and at least my mouse move while I don't do anything. Yeah, who wants to hire those employees, right? So let's see here. But I'm talking about recessions, and we might be going into one. Let's take a look at what about the job numbers from '07. Why not? According to the Daily Bureau of Statistics, '07, the total number of non-farm was this, with a net gain of 1.3 million jobs throughout the year of '07. So '07 was a positive year. However, the number can vary depending on a specific month, blah. My point is this, job growth slowed down. Compared to '06, the job growth in '07 was significantly lower. Job growth is this one. We had 500,000 fewer new jobs than previously estimated. So the fakeness is coming out, right? Industry trends. Let's see here. Basically, my point with this slide is that, hey, in '06, in '07, job growth was significantly lower. '07, we really actually kind of marked the last recession as 2008 through 2012, technically, right? But in '07, it was hard. I graduated in '07, and it was hard to find a job. It was really hard. Like I got passed up. There were people that wanted to hire me, and they just got passed up because I was competing against people with 5, 10, and 15 years experience for the position I wanted straight out of college, right? And I wasn't just shooting for the stars. I wasn't trying to be a VP or something. It was just an entry level job, like a job that paid $45,000 a year, and others with 10, 15 years experience or so were applying for it because there were no jobs. The jobs were hard to come by, and they will get harder to come by in 2025. I think my estimation is by the end of this year, maybe 2026, we're going to start to see the job market crack, and we're going to slip into a recession. Now, should I be fearful? You're like, oh, what should I invest in? What should I do? Well, you should always be prudent, right? This is financial advice, but prudence is just smart anyhow. But let's look at let's see how crude did in the last recession. So Come 2006, it was kind of up a little bit, kind of dipped down 2007. This will shake out a lot of people. Like, oh, crude's down. No one's a believer. Da da da. Ironically, it's hovering around this, or it is kind of now, except for it's about $10 higher, $5, $10 higher, and then it just shot to the moon, to the moon. This has happened. This is what happens with crude. A lot of people try to push it down, push it, keep it in this thing, and under the surface, there's a lot of things going on and a lot of water boiling. All of a sudden, it just pops that lid off and it starts to overflow, and the price flies up, right? Then we hit a recession, right? So in 2008, again, yeah, it started to pop. I'd say in 2007 it flew up. The recession started 2008, give or take, and about halfway through, 6 months into the recession, it does eat itself because when you kill the economy with high oil prices, when you knock the legs out of a weak economy, right, for high oil prices, a strong economy can take high oil prices, but a weak one cannot. It knocks itself down, but in, let's see here, from here, April 2010 to February 2009, it's a year, give or take, it builds back half of what it lost, right? So, and here we go type thing. Now we're right here hovering a little bit where we were at. It's more tighter, right? But it could shoot up as well. We'll see. I don't know if it's going to shoot up as high. We'll see. I'd be happy with anything breaking over 100. People will definitely drill, baby drill if that happens. But it'll also probably knock the legs out of the economy, and we'll go into recession just like it did. And the last one. So we've got a lot of open inventory right now for crude oil assets, oil and gas assets. If you're interested, just let me know. We'll talk about it. Excuse me. But getting into these now, especially at discount prices, is going to be a great thing because as we see things are coiling up right here, they're probably going to pop up to the height. Oil and gas companies, I know Trump wants to drill, baby drill, but let's go to what they drill with, and that is the rig count. So we've got Inveris, their total rig count type thing. This is by basin. The biggest thing is we can look at is the change in the daily or the monthly type thing. Basically changing weekly because it comes in weekly. But in Oklahoma and the Anadarko, you got 2 down. Now, sometimes that means they're just moving them from one location to the other, so they're down. They're not actively drilling, which I know at least one of them is because one of the people I know are actively drilling there. But they've got another one type thing in Texas. They're down 6 right now, right? What happens with these drilling rigs is you can't just order them on. These things are multi-million-dollar pieces of machinery that are very big, and they take a bit of time to create, right? Kind of like building a carrier. You can't just, okay, we're gonna go to war next month. Let's build carriers this week. Doesn't work that way. It's gonna take even World War II, when we were slapping them out of shipyards like crazy, it took I think 2 years or more to actually build a carrier, right? And that's with guys working overtime and getting stuff done. These don't take that long, but they do take to recreate from nothing about a year or so, give or take, depending on a lot of variables. But they do wear out. They got to get parts and everything like that. They got to go to the yard. And sometimes, like a car, you can just swap out the alternator in it per se with another one. With another one you find in a car in the junkyard or something and slap it on. Hey, it works. Let's do it. Let's drill. But those are band-aids. They only take a certain amount of time. My point is this. If we don't create new rigs, which we're not really creating a lot of new rigs because oil prices aren't high enough and steady enough, these numbers will continue to go down. This is what we use to punch holes in the earth to get oil and gas. If we're not punching more holes, then we're not going to get any more oil and gas that we need, right? And so, yeah, so this is a -10 this week, -10. We had 2, in some other basins we added 2, but those are the smaller basins. So and these numbers will change and go up and down type thing, but the rigs are, as you can see, they're kind of staying steady. Back before the pandemic, when Trump had it, they had almost 2.5 times this much, right? There was up to 1,100, 1,200 active rigs. If we're not going to see that anytime soon, is my point. So oil is going to be pretty good. It's going to stay pretty high, high to medium high for the foreseeable future. And even if we drill, baby, drill, the oil and gas companies, the big ones, we're saying, hey, we're not gonna drill our best minerals, drill our best leaseholds at $70 oil. You know, we're gonna wait till it gets up to 95, give or take, maybe 100 and maybe 90, and then we're gonna start drilling. So it's this cat and mouse. And in reality, you know, nothing's changed because it's at a standstill right now, and the current administration has bigger fish to fry. So we're already seeing them punch a lot of holes in the ground right now where we're at, and we can't wait till these rigs come on. So it's going to be good. So I'd encourage you to now, but that is my thoughts. Whatever you do, just be safe. Remember, take care of yourself and your family first. No one ever goes broke taking profits is a great quote I heard today. So none of this is financial advice, but I just hope that you guys do well for your future, your family, and I will sign off. I'll sign off till then. But if you have interest in this, get it now. We got some really good ones that are active right now, that are on sale, and so we can get you some great deals. Contact me if you want, and I'll see you in the next video.